Welcome back. Today we're diving into a detailed stock review on Bloom Energy. It covers the business, financials, risks, opportunities, and gives a buy, hold, or sell verdict for 2025.
Right. And it's a solid piece of work, definitely lays out the groundwork.
It does. And we think there are some key ways to make it even stronger, especially for the target investor.
Exactly. So the material makes a pretty compelling case, actually, for that nuanced hold with caution recommendation on Bloom Energy shares. But I was thinking, how could we sharpen that verdict? Make it a really actionable investment thesis, especially for someone who's, let's say, cautious but discerning, a moderate risk appetite.
That's a great point. Getting right to the heart of it, what should that specific investor do?
Yeah.
Because the verdict section, it lists a lot of reasons, buy, hold, sell factors for Bloom. All valid. But it feels a little scattered, maybe? For that cautious investor, it might leave them wondering what the immediate next step is, beyond just dipping a toe in with a small starter position.
Right. There's some ambiguity there.
We need to really nail down the why behind hold with caution and make it crystal clear.
Yeah, I agree. So my suggestion here would be to kind of synthesize that whole verdict section, turn it into a much more focused narrative, one that clearly spells out the core reasons for the hold with caution stance.
Okay.
But, and this is the crucial part, it needs explicit, quantifiable criteria, milestones.
Okay, so things they can actually watch.
Exactly. Things an investor should actively monitor that would, trigger a real shift in their strategy for Bloom Energy. It's less of a snapshot, more of a roadmap.
I like that. A roadmap. It empowers the investor, gives them clear decision points. So for instance, we could ask, what's the single most critical factor for Bloom Energy? Is it hitting consistent GAAP profitability?
Or maybe sustaining positive free cash flow. That's huge.
Or hitting that big 2-gigawatt manufacturing capacity target they've set out?
Right. Pick one.
By isolating that North Star metric, you give the investor focus. If Bloom hits that specific goal, well, that seriously strengthens the buy case, shows a sustainable path.
And conversely?
Conversely, if that critical thing isn't met, or worse, it starts going backwards, then it points much more decisively towards sell. It signals, fundamental problems aren't being solved.
And you need numbers to back that up, not just feelings. Qualitative statements aren't enough. So specifying key financial metrics becomes really vital. Think about, say, a defined quarterly revenue growth rate, something that shows they're really hitting their commercial stride.
Or maybe a specific non-GAAP gross margin threshold, showing that operational leverage is actually kicking in.
Yeah, or even a target PS ratio that acts as a trigger for reevaluation.
And on the operational side, too.
Definitely. Like the successful deployment of a major project. That validates the tech, the execution.
Or maybe a clear resolution to those leadership changes, like the CFO leaving. That's a tangible thing.
These are the concrete indicators a moderate risk investor needs to be tracking for Bloom Energy shares, not just relying on gut feel.
You're absolutely right. Measurable goalposts, and that applies to taking profits too, right?
Oh, for sure.
When the review says trimming some gains if valuation gets too stretched, what does that actually mean for Bloom Energy in practice?
Exactly. Is it a specific PE ratio, maybe relative to peers, or when the implied growth baked in just seems unrealistic?
Or maybe just a certain market cap level. That can be easier for some investors to track in real time, without complex models.
Yeah. Benchmarking it against a peer group using standard valuation metrics, that gives you tangible triggers for action, predefined ones.
It takes the emotion out of it, transforms that passive hold into an active management strategy, makes it much more useful.
Precisely. The core takeaway, I think, for any investment analysis like this is getting beyond just generic advice. Identify the main catalyst or the biggest hurdle that's going to make or break the investment. Then give people measurable ways to track it. That's how you turn an opinion into a strategy.
Well put. Okay, let's shift gears slightly. The material on Bloom Energy also covers government tailwinds and policy risks, and competitive pressures too, which is important context. Standard stuff to cover. But I read that section and thought, could we go deeper? Is there enough evidence here to support a more specific, more granular look at these outside forces? What's your take?
Yeah, I had a similar feeling. The discussion on government policy, how it's both a help and a hindrance, and the mention of competition, it all felt a bit high level.
Right.
For an investor trying to really understand the risks and opportunities for Bloom Energy, it lacks the kind of detail you need to grasp the magnitude, the specificity of these factors. Like, which government incentives are really critical? It doesn't quite say. Or, who are the main competitors posing a real threat? We don't get concrete examples.
Okay, so it's hard to quantify the impact from what's currently there.
Exactly. It feels a bit theoretical.
Got it. So the goal then is to make these external forces feel more tangible, less abstract. My suggestion would be to really boost the specificity around those government policies.
How so?
Outline which specific incentives have the biggest impact on Bloom Energy's bottom line or market potential, and crucially, how could changes to those policies quantitatively affect them?
Okay, put some numbers to it or at least clear cause and effect.
Yes, and similarly for competition. Identify and maybe briefly characterize the main competitive threats. Give the reader a more concrete picture of that industry landscape Bloom operates in.
Absolutely. Like, take the legislation. Don't just say government tailwinds. Name the specific acts, maybe provisions within the Inflation Reduction Act, right? The bits related to clean hydrogen production tax credits, perhaps, or fuel cell deployment incentives that directly help Bloom.
Okay.
And then discuss the potential catches, the contingencies, the sunset clauses in those acts that represent a specific risk for Bloom Energy down the line.
So connecting the policy directly to Bloom's potential future earnings or risks.
Exactly. Helps an investor see not just the upside, but the terms of that upside and when it might evaporate.
And maybe even try to quantify it, if possible. Like estimate what percentage of Bloom Energy's revenue, current or projected, is tied to these specific government programs.
Ooh, that would be powerful. Yeah.
That would really show the dependency, the vulnerability. If an investor sees, say, 30% of next year's projected revenue hinges on this one IRA provision, well, that clarifies the risk profile immensely.
Definitely. And on the competition side, yeah, name names. Who are the one or two key competitors, direct or indirect?
Is it Plug Power on the hydrogen side? Or maybe specific battery storage companies eating into their market?
Or even just improvements in grid reliability, right? That could reduce the need for Bloom's kind of solutions in some cases.
Good point. And then explain why they're a threat. Is it a different technology? A better cost structure? More market share in a key segment?
That moves it beyond just competition exists to a focused assessment of the actual threats Bloom Energy faces. Much more useful.
Yeah. It seems the overall point here is, for any solid analysis, don't just list external factors.
Right. You have to identify which ones truly matter, try to quantify their impact, and explain exactly how they affect the company. That lets an investor judge the real strength of the business model in its environment.
Okay, final area. The material does point out Bloom Energy's, well, pretty high valuation, and it flags execution risks, which makes sense, especially in clean energy.
Standard risks for a growth company in this space, yeah?
But I'm wondering, is the connection between that high valuation and those execution risks really drawn out? Are the full implications for Bloom Energy's future fully explored, or could we bolster that link, give it more weight?
I think that's a really key area we could strengthen. The review is accurate. It notes the high valuation, phrases like priced for high growth, PE is very high, forward PE is large.
Mm-hmm.
And it highlights the execution risks perfectly well. Scaling up production, delivering on time, the CFO leaving, supply chain issues, all true. But it could dig deeper into the implications, the mechanisms of those risks. Right now, it sort of states them as facts.
Right. It doesn't quite spell out why these facts are so critical or how they might actually impact Bloom Energy's stock down the road.
We need more of the so what factor there.
I agree completely. So my suggestion here is a more analytical exploration of both the valuation and the risks. Maybe frame them comparatively. Discuss some specific what-if scenarios. Outline the direct financial hit if these risks actually bite.
Okay.
That gives the investor a much clearer, more visceral sense of Bloom Energy's real risk profile, beyond just a list of concerns.
Okay, let's take valuation. Instead of just saying, PE is very high,
Which it is, yeah.
Benchmark Bloom Energy's multiples. PS, EV to sales, whatever fits best. Compare them against a relevant peer group, or even look at historical examples of growth-stage clean energy firms.
Right, to show how high is high.
Exactly. Illustrate just how extreme that premium is. Show what kind of aggressive growth path is already baked into Bloom Energy's share price. If you show the market expects, say, 50% year-over-year growth for 5 years, while the sector averages 20%, that paints a very clear picture of the risk if they fall short. It puts high valuation in context. Stark context.
Precisely. And for execution risk, let's make it concrete. Pick a scenario. Like, what if that plan Bloom Energy has, doubling manufacturing capacity to 2 gigawatt by end of 2026? What if it hits major delays or big cost overruns?
Yeah, what happens then?
How does that directly hit the improving non-GAAP margins that the bulls are counting on? Does it push GAAP profitability further out? Does it strain cash flow? Maybe force them into dilutive financing?
Exploring those knock-on effects. That's useful.
It turns a bullet point risk into a tangible story about potential financial consequences for Bloom Energy. Much more compelling.
Yeah. And the leadership changes too, like the CFO departure. It's not just a news item, it's a potential disruption, right? How might that impact Bloom Energy's financial strategy at a critical time? Investor relations.
Especially during this big scale-up phase that needs so much capital and oversight.
Exactly. Is there a risk to executing those complex operational plans if the financial leadership is unsettled? Discussing those potential ripple effects adds depth. It helps the reader grasp why it's a risk, not just that it's a risk. Shows the potential broad impact on Bloom's future.
Absolutely. So the fundamental takeaway, again, seems to be connect the dots. Don't just state facts about valuation or list risks. Explore how they work. Try to quantify their potential impact, paint scenarios, help the investors stress test the whole thesis for Bloom Energy. Understand the fragility or resilience.
Couldn't agree more. It's about providing that deeper level of analytical insight.
Okay, so just to quickly recap our critique on this Bloom Energy stock review. We hit 3 main areas for potential enhancement. First, really sharpening that investment thesis, making the hold with caution more actionable, with explicit, measurable guidance for that cautious investor. Maybe pinpointing that single most critical factor for Bloom's future.
Right, giving them clear triggers.
Second, deepening the context around those external factors, policy, competition, getting specific, citing actual legislation, trying to quantify the dependency, naming the key competitors and why they matter to Bloom Energy.
Making it tangible.
And finally, elevating the analysis of valuation and execution risk, moving beyond just stating them to really exploring their mechanisms, their financial implications, using comparisons, using specific what-if scenarios.
Connecting the risks to the potential outcomes more directly.
Exactly. We've offered some concrete suggestions, like defining PE triggers or outlining the impact of production delays. We think working these points in will make an already strong analysis even more impactful for the reader.
Agreed. It's about adding that next layer of analytical rigor and actionable insight.
So we definitely encourage you to refine the piece based on this feedback, and please do send it back our way. We'd be really interested to see how you evolve this deep dive into Bloom Energy shares and its prospects.